Hey, this is Sasha Evdokov, founder of TradersFly.com and InvestingHelpDesk.com, here to share with you some insight about some common questions that many people ask me about trading, investing, and the stock market. Now, this week's question is all about, are oil, gold, transports, healthcare, or technology stocks a good investment now at this moment? If so, which companies would you recommend? This is a little bit of a difficult question to answer because of the mindset that many people are programmed to trade stocks. So first I want to talk about the viewpoints of stock trading in general, and then share with you the alternative and better way that I look at trading overall. So in general, when you look at the viewpoints of stocks or investments, the normal and traditional way people have been trained to look at stocks is through sectors. So they look at sectors and which ones are doing well. Is it healthcare? Is it oil? Is it gold? Because this is what the news likes to talk about. This is what people in general like to gossip about. The boats, the airlines, the railroads, all these are sectors and areas in industry. If it's technology, then which one would you go with? This is just a social way to connect and bond with other people. And then what they do is they look at companies themselves as it is based on investing in companies. So they'll look at those things in a sector. But unfortunately, the problem with this is that by the time you hear oil or healthcare or something is a good investment, most professionals are already getting out of those positions. Instead, the way I like to look at things is what is consolidating, what is building for higher moves, and choose stocks based on patterns. So again, think about the viewpoints. The viewpoints that people have on sectors is all about gossip. It's about connection, human connection, a way to discuss things. And although, yes, you may be thinking about it from a supply and demand standpoint or demand and supply, such as everybody's trying to pile into airline stocks, by the time you hear this, most people are already out of it as far as the professionals are. Now, yes, sometimes you can hear things a little early, but I don't like that approach because those sectors will constantly be changing, and then you don't really know, okay, well, what if things change? What if the more popular kid becomes something else? So that's why I don't normally like investing in that way in categories or sectors. So for me, I typically look at more technical analysis and what's consolidating, what's building, and then you choose to those technicals what's been working for you. So you choose patterns that have been working for you. So when you look at trading patterns, there are no emotional attachments when you trade patterns, such as falling in love with the iPhone in Apple or the Xbox with Microsoft. You simply trade stocks based on their price action, behavior, and movement. Let's take a look at how this works on a real chart example. So if we're looking, for example, let's just say Win as one of the examples I like to use, you can see that this chart creates a lot of sideways patterns, a lot of patterns that move sideways, and then we've broken lower. Then again, we'll move sideways, and then again, we break lower. We'll move sideways, break lower. So what you could do is every time you move sideways and then you have that initial break, so let's just say over here, you could add to your short position. So in all these spots and areas where you have the break, you could add short. Now, if you don't like trading short, you could do the opposite. So you could see what's happening here as we move sideways. Okay, and the stock is breaking higher, so now you add to a long position or bullish or positive position. So again, that's what you do is you look for a pattern that's consistent, and here we had sideways pattern. Taking a look at other sideways patterns, there's things like Amazon. You can see here, for example, we move sideways. So let's just take a look here. You move sideways, you break higher. We move sideways, break higher. You have another sideways move, somewhat sideways. Okay, so you can see how that price action really moves. If you choose a different kind of pattern, what you could do is do like ABCD patterns. So going back to Win, you can see in a longer time frame here, we have an ABCD pattern. And if you like trading ABCD patterns, Okay, so you have, here's your ABCD. So once we have this pullback, ABC, B to C, you get in kind of around this level or around the halfway point between A and B. So if you take A to B, you go to halfway point, you get about right there. Sometimes it'll come up to that 38% level if you do the Fibonacci sequence. But in either case, you get somewhere around this level, and then you're looking for that C to D move. This also works for stock like Apple, same exact concept. So here you have your A to B, B to C, okay, so about the halfway point, okay, you start getting into the stock, and then that stock gets to the D level, okay? So that's what you're looking for, and that's what you're doing. Of course, you want to pay attention to volume and other things, but what I'm talking about here is looking at simply a strategy or looking at consolidation patterns, and this happens in all sorts of stocks. If you take a look at Tesla, you have the same exact concept. Let's delete some of these drawings. And now what you can do is, as you look at this, same exact thing. You have an A to B, okay, B to C, and C to D pattern. If you're looking at sideways patterns, you could draw sideways action and get in the stock on the breakout or break down, either way, or on the bounces. Okay, so when the stock bounces at these levels, you could get into the stock. That's also an option if that's the way you like to play stocks. Taking a look at one that's recently been moving, here's another one, sideways pattern, okay? And this is what I notice. People are getting into this stock, so you get into that stock around that level. You know, and you can take a look at any stock that there is and find those patterns. And if you don't see that pattern, okay, if you don't see that pattern forming currently, okay, like looking at Netflix right here, you might do it on a breakout right there. If you don't see that pattern forming currently, then move on to another stock, because I would rather trade the proper pattern than just trade what somebody says on TV, because finding a right pattern, you can see this one has no pattern for me to trade. And as I scroll and look through some charts, some of these may not have a pattern that I see. They may have a pattern, but it might not be one that I am aware of. So as I start looking for things now, this one could be interesting. So it could be coming into the highs. There could be a pattern there. So as you start looking at these more and more, you'll slowly start being aware of certain patterns. And then you'll come across like one right here. There's a little pattern, sideways action, volume's coming in, the pattern is breaking out, and there you go. So you could do things like that if you're interested in a pattern movement, and you'll find and discover 3 to 5 patterns is really all you need. You don't need to know 1,000 patterns. You just need to know a few basic support and resistance levels. So you can see here coming in. Here's also the swing highs. So you can see we got into resistance here and we broke lower, and now we're breaking out over here at that price level. So just knowing that pattern would have done really well for you. And if you would have known the ABCD pattern, you had an ABC to the downside, okay? ABCD pattern moving down. So all these things would help you just spot new patterns. So the more patterns you know, the more helpful it is. Just make sure you don't confuse yourself on the patterns. So choose your patterns rather than just choosing oil or gold or bonds, because sometimes when you get into things like that, you might get confused and then you trying to figure out which one is better. So for me, I would much rather choose a pattern than choose kind of a sector and then try and pick something within that sector. I would rather just choose a high quality stock on its own rather than choosing or forcing myself to pick something within a sector. Thanks for joining me. If you're interested to see more questions and answers like this video, then be sure to visit me at investinghelpdesk.com. And be sure to sign up to my newsletter, where I send out some free training material as well as some bonuses and sometimes even free books simply to my newsletter subscribers. And to do that, just click the sign up here button right here on the screen and you'll be taken to that page. Now, if you're interested to try my critical chart services, where I post weekly charts for real live markets, then just try it for free here at a private hidden location by clicking the button, and you'll be taken to that sign up page. And if you're interested in subscribing to YouTube, click the red button and you'll be subscribed. In the end, thanks for joining me, and remember that there's more to life than money. Go out, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.